Hey traders, Raghee here, and in this free recap video we're going to cover three markets that I'm watching all the time. They're a big part of what I use to gauge the health of any country, and that is the currency of the country, the bonds, and I also like to look at gold, generally speaking. So let's talk about the US, let's talk about the US dollar, 30-year bonds, and gold. And so what we're looking at here right now is the 30-year contract in an overall uptrend. And one of the questions that I'm getting, because we've bought this market steadily since November, is when is the next buy coming? And so the first part of that question is going to require that we understand what the current market trend is. And in this mostly green grab candle environment, we have an uptrend. And if I have an uptrend, that means I'm waiting for a retracement back to a layer of support, which for me is going to start, likely here at this Darvis level, maybe aggressively at the 34 EMA high, which we can see we've been steadily bouncing off of. But I like to have something a little bit more conservative. And so I'm really looking at something right in here, a little bit more conservative. Now that might be pushing it a little bit. I mean, we have been there before right here on this candle. And so waiting for something at around the 147 level might be a little too conservative, but that's going to be my main layer. That's going to be the main level. In fact, that could be considered a moderate level, and then conservative would be closer to about 146.20. Now, I do want to mention that the entire zone is valid. Just the higher the level, the more aggressive. The lower the level, the more conservative. All right, so there is a buy here. I'm waiting for a pullback, and I do want to get long. It's pretty much the same thing that we've been doing since November. This has been a 5-month-long, setup or 5-month-long bias that we've had to stay long and buy pullbacks or oversold levels in the 30-year. The 10-year would apply too, by the way. Same thing here. All right, what about gold? Now, I'm not mentioning these three because they necessarily move together. That's one thing that I want to bust a myth on right now. I do not follow correlations unless we can pinpoint the cause. No correlation without causation. And anyone here who thinks that gold and the equities markets move inverse, or that bonds and the equity markets move inverse, the easiest way to dispel that myth, and it is a myth, gang, is simply lay up the two markets side by side. I'll put the Dow on the right, I'll put the 30-year on the left, and take a look. December to December lookbacks. Do these markets look inverse to you? They don't to me. Therefore, remember, be very careful about subscribing to correlations without visual proof that there is that inverse or negative relationship. So heading back on over to gold, we are heading lower after a really nice move higher, and I will likely look once again at the same zone that we've looked at before. Many of you that follow this recap video know this is the third time that we had bought this level. Pretty predictable bounces, although here's something that's really worth noting, gang. For the first time in a while, we have 1, 2, 3. These are lower highs, gang, and they are a warning. When we do get support, which has been pretty steady, support, 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 that's great. But when we do bounce, it's been a lower high now really 3 distinct times in a row. So let's remember, if we do buy, I think the buy is viable, but on each bounce, we've been making what seems to be just better than about a 50% of that last major move, sort of recovery, if you will. Just over 50% actually got to the golden mean there, the 618. What about this time? Look at this, 618 again. So if we bounce again, what do you think? There may not be much of a bounce. We might be to about 1304. So just remember, every time we've bounced from this area, we're getting to about a 618 retracement, and then the market exhausts. All right, finally, the US dollar in this trio of markets that I look at every day. Am I a dollar bull? You better believe it. I am very bearish to European economy, and I am generally speaking very bearish to euro. Now, we've had opportunities to either fade the dollar, or if you've been looking at the euro versus US or the FXE or the euro FX futures, we've been hitting support levels right around that 112 area and then bouncing higher. but I think that's going to come to an end. And so I think we are going to punch to higher highs through 97, and that means with the propulsion dots and the steady green grab candles, we can start to short. We can start to short bounces in the euro and buy pullbacks in the dollar. Okay, so there's your gold market, your bond market, and dollar, and what I've got planned here in the near future for all three of these markets. I'll see you in the next update.